Hi, I'm Tim Brandner with Alaska Legislative Digest, and welcome to Capitol Views. And welcome today to Deven Mitchell, the new director of the Alaska Permanent Fund. Welcome. Thanks for joining us, Deven.
Thank you, Tim. It's a pleasure to be here today.
Deven, just to start out, I'd like to make clear for viewers, if some may not realize this, but you are the director of the Alaska Permanent Fund Corporation, not the Alaska Permanent Fund Dividend Corporation. A lot of people get it confused, but the dividend and its calculation is the responsibility of the legislature and the Department of Revenue. But people get it confused. You probably get calls all the time of people, where's my check?
We actually do get calls all the time, and it is a point of confusion for the general public. And we try continually to educate folks that we're responsible for protecting the permanent fund and investing the permanent fund. But when it comes to permanent fund dividends, you need to call the Department of Revenue.
And what's still very important, though, is that you and your staff are responsible for having the fund generate a maximum return, not only for the dividend, to making sure there's enough money for the dividend, but also the percentage of market value to the state treasury, which is important because it now pays the bulk of the general fund revenue to the state. Anyway, thanks for your good work, you and your staff, Deven. And just to start off with, maybe tell us a bit about yourself. You've had an extended career in state service, maybe some of your professional background and things you've done before.
Yep. So I'm a lifelong Alaskan. I was born in Cordova, Alaska, and then raised in Yakutat for a bit, and then Juneau. I've worked prior to working at the Permanent Fund Corporation, worked in the Department of Revenue for approximately 30 years, primarily working as the debt manager for the state of Alaska, as well as the executive director of the Alaska Municipal Bond Bank Authority, which in large part probably prepared me for this job more than anything, because it has similarities in as much as you're dealing with the legislature on both programmatic goals as well as budget issues, and then dealing with Alaskans from around the state to realize their goals of capital project financing. And so while I was on the sell side of the table from a public market or securities perspective, and now I'm on the buy side of the table, there was a great symmetry to move into this position.
One of the interesting things about your work as debt manager, Deven, as I recall, is there were times when you had to be a salesman for Alaska, times when oil revenues were in the tank and we were taking a beating, and of course our physical structures was still unbalanced, but you had to go back to New York along with the commissioner to make Alaska look good as an attractive place to buy bonds.
That's correct, both with rating agencies. So we have 3 credit rating agencies that review the state's credit annually and intra-year as well, but additionally with investor groups. And a large component of that work would be describing the permanent fund and the corporation's work to invest what's become a renewable resource in the world's economy to provide for the needs of the state's economy and the residents of the state of Alaska.
That was certainly the bedrock of the state's finances, Deven. But maybe just briefly, what is the fund's value at this point, and its sort of annual return? I know we're sort of in a period of some headwinds in the market right now, but what's the latest?
The current balance is approximately $77.6 billion, and that's about in line with the FY22 ending balance, the June 30, 2022 ending balance. During that time frame, we've had payouts to the general fund of about $3.1 billion, and so there have been earnings. There's also been additional deposits from royalty revenue of around $600 million, and so the fund's performance for the fiscal year is positive, but it is still difficult to hit the inflation plus 5% target that the fund has for its return expectation.
Well, these are sort of uncertain times all over. But Deven, how do we compare with other funds like the Permanent Fund? Are we benchmarking? Are we about at the same level? Are we a little behind or ahead?
we compare ourselves to a variety of benchmarks. And so each asset class has benchmarks. The fund has 8 asset classes, and each one of those has a benchmark that we've historically compared well with. We also have an external advisor, Callan and Associates, which reviews both the permanent fund corporation, or the permanent fund, and the work that the corporation does on behalf of the fund, as well as the Alaska Retirement Management Board. And they compare us with our contemporaries, and we compare well, in particular, when you look at us through the lens of a public fund similar to a pension trust, that we're near we're in the top 10% of the performers when compared to that metric.
Deven, I think one thing I want to ask about is inflation proofing and why it's important to inflation proof. A lot of people, I think, just assume that the permanent fund kind of inflation proofs itself, but that's really not the case. Maybe you could explain the mechanics of that and why it's important.
That's true. The way the fund was set up initially and how it's been constructed over the years since then has led to a 2-account system. We have the corpus, and then we have the earnings reserve. And if you don't appropriate money into the corpus, then it won't keep up with inflation on a year-to-year basis and maintain the buying power of the fund. And so when you look back over the last 45 generations of Alaskans that have given up a portion of the current year revenues so that the permanent fund would exist, it's important to maintain that contract with the future generations of Alaska, so the buying power of the permanent fund is held for each future generation that's going to rely on it.
And Deven, last year was a high inflation year for Alaska, but what is the inflation proofing calculation to offset that? I guess that will be made later this year, early next year.
Yes, the calculation currently shows a transfer of approximately $4.3 billion from the earnings reserve account to the principal for FY 2023, the current fiscal year.
And that's more than what it was in recent years. Inflation was lower in those years.
That's correct. We've had a fairly long period of extraordinarily low inflation, and we entered a period of what might be more normal, but is certainly high relative to that recent experience, inflationary environment. And so where we had estimated prior to the fiscal year start that transfer being something closer to 1.3 billion, it wound up being 4.3 billion to actually keep up with the rate of inflation.
Well, it's amazing what the effect the inflation has. Well, Kevin, just take we don't have a lot of time, but maybe just speculate what's out there in the future. What does it look like long term?
It's going to be a challenge, Tim. I mean, I think that we're in a period of uncertainty right now. The benefit of the fund is that it is invested with a long time horizon. As I mentioned earlier, we have 8 asset classes. About 45% of those asset classes are relatively illiquid, meaning that they're invested in long-term strategies that are anticipated to bring higher rates of return because of that illiquidity. But at the same time, then managing within the public markets that are more liquid to have excess return in pockets. So trying to find value in the public equity space, or incorporating strategies in the fixed income space to add value to the performance of the fund and ensure that we are, as best as is able, meet the needs of the state.
Well, that's certainly a challenging scenario you laid out, but you guys have performed well, and we look forward to continued performance, and we have to be sure and have enough to meet the POMV, and of course that all important dividend, which is important to Alaskans. Kevin, thank you very much, Deven, for joining us, and look forward to talking more.
All right, thank you, Tim.